don't think the market is helping. I would say, though, that our sense is that over the last few days, investors have been taking a much closer look at the kind of case for profitability with ride-sharing companies, specifically the unit economics. We've been fielding a lot of questions about whether ride-sharing in general is it a good business. Very simple questions like that.
What do you say?
Well, I think, yes, it is. It depends on the market. I think the main thing people are wrestling with is, if these companies like Uber and Lyft do pull the levers that they have to achieve profitability, will that make ride-sharing less appealing for large parts of the population? And could that reduce the size of the addressable market?
You have, I guess, a window, so to speak, into the mindset of the individual investor, unlike most. So what do they say? What do their actions tell you about Uber?
Well, I mean, on IPOs in general, there's such huge, and we've had probably a 3 or 4 year period where we haven't seen as many. There's some pent-up demand. And this one's, obviously a very familiar name.
Yeah, household names, right?
Yeah, so I mean, when Facebook, for example, it's 22% of our almost million trades. This one was 5%. So it's kind of a new frontier because they're staying private so long. We're not sure exactly how much interest there's going to be by the time they get to the market. Today, it's probably 2% of our trade volume, which we would have anticipated would have been a little higher. But then again, with the performance that we're seeing, that's probably okay.
You make a good point in that, some companies, Fidelity and others, maybe yours, they're investing now in late-stage private companies as if they're public companies and have been so for so long. So you have to think about what the overall impact is once the actual listing goes for an offering and whether that's leading to selling.
Look, it's really a problem for the public investor because if in every private round you have to ratchet up the valuation, by definition, you're crowding out the public investor. And excitement and buzz is only going to get you so far, not just in a bad tape, but when you're dealing with companies where actually the unit economics look pretty worse year over year, you have to start doing your work. And so you're setting up the public investor actually for not a great situation.
Yeah, I mean, I wonder also.
It's just staying too long private.
I wonder also, Tom, if it says something about the way the private market is valuing these companies. We've heard for a long time things look bubblicious when it comes to some of these valuations in the private market. I mean, what do you get? What's the public market telling you on that?
Look, I mean, I think a lot of people like to look back at some of the other .com sort of bubblicious type environments. I mean, I would make the case that this round of companies that are likely to IPO this year, they're different in a lot of ways from those other companies. Not all of them are profitable, so that's one kind of ding against them. But they've achieved scale in a way that a lot of the other kind of bubblicious companies didn't. They've just penetrated the daily life of consumers and the U.S. population to a much larger degree, and have established themselves in a lot deeper way.
I say if the brand names like Lyft and Uber can't do well, I don't know what that must hold for the lesser-known names that are in the queue waiting to go public and how the individual is going to react when they do.
Yeah, but I would say some of those lesser-known names haven't been private as long.
Like
so,
Zoom
I think
did pretty well.
I think you have to think about it in that context as well. And what I would say is, although Uber's performance has been very poor, this reminds me so much of Facebook. If you remember what happened when Facebook IPO'd and it went all the way down, I think $17, and we had a lot of inquiries and our clients said, not that they all bought it the first day, but they bought it over a period of time, and look at it today. I mean, it's all about the duration. How long are you going to hold this? And do you believe in this company and its prospects? And if you do, then they have an opportunity to get in whenever they'd like.
And you still do, bottom line, Tom? You're telling people?
Well, I've got a buy rating on Lyft. I've got a neutral rating on Uber.